Have you ever wondered how artificial intelligence is reshaping the commercial real estate landscape? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. Artificial intelligence, or AI, is revolutionizing the commercial real estate industry with new technology that's enhancing efficiency, decision-making, and project management. From optimized property management to enhanced market analysis, AI is improving the tools and resources commercial real estate professionals have at their fingertips. The combination of AI and human intelligence is leading to growth in the commercial real estate industry, enabling professionals to stay ahead and make knowledgeable, data-driven decisions. AI helps put commercial real estate professionals at the forefront of the industry by improving and speeding up the overall transaction process. Whether buying, selling, or leasing commercial properties, AI technology can analyze vast amounts of market data, target specific areas of interest, and identify trends based on property preferences. This enhances automated valuation models and allows professionals to access efficient data and anticipate market changes in real time. AI tools like CoreLogic use machine learning algorithms to analyze property characteristics, location attributes, historical sales data, and current market trends. This results in accurate and objective property valuations, helping professionals make informed pricing decisions and investment choices. Although AI is not commonly known to be personable, it can improve client and realtor relationships through personalization. AI can better target potential investors with personalized property recommendations and blueprint virtual tours for buyers. Additionally, AI provides 24/7 personalized interactions with customers through tailored messages based on past interactions, enhancing engagement and overall customer satisfaction for companies. AI-driven chatbots can handle routine tenant inquiries, schedule property viewings, and provide instant responses to customer questions. This not only improves customer satisfaction, but also frees up time for real estate agents to focus on more complex tasks. One key way AI is integrating into the commercial real estate industry is through evaluating large site plans and locations. AI-driven platforms can match buyers with properties based on their preferences and needs, as well as provide real-time market analysis based on data such as rental rates, occupancy rates, and consumer behavior. Using AI in this format can lead to greater risk prevention and improved understanding of how to maintain the property being evaluated. AI platforms like Reonomy analyze vast data sets to identify investment opportunities and provide insights into market trends. This helps investors and developers make data-driven decisions about property acquisitions and developments. AI is also a valuable tool for professionals in the commercial real estate industry looking to increase a project's sustainable efforts. It can help design energy-efficient commercial developments and perform environmental impact assessments. AI is useful for evaluating and analyzing sustainable factors like carbon emissions, waste generation, and resource consumption. This allows architects and developers to create more sustainable materials and design choices. AI tools like SpaceMaker use algorithms to optimize building designs for energy efficiency and sustainability. These tools can simulate various design scenarios to find the most sustainable and cost-effective solutions. For commercial real estate professionals, AI is a useful tool for navigating complex projects, especially when building strategies. Innovative technology and resources will continue to shape the industry as more forms of AI are incorporated to increase cash flow, maximize investment returns, and boost operational performance. AI-powered project management tools like Procore help streamline construction processes by providing real-time updates, tracking project progress, and identifying potential issues before they become major problems. As AI continues to develop and expand, new tools are being created to support the work of professionals in the commercial real estate industry. From gathering and analyzing market data to targeting specific areas and identifying trends, AI is proving to be a valuable tool in this industry. AI-driven market analysis tools like CoStar provide comprehensive data on commercial properties, including vacancy rates, rental prices, and market trends. This helps commercial real estate professionals make informed decisions about property investments and management. During the COVID-19 pandemic, developers made a strategic pivot from office spaces to warehouses, and this move is now paying off as developers are cashing out. A significant example of this trend is a development team that purchased and demolished an office property in Mount Prospect, Illinois during the pandemic and constructed a warehouse in its place. This warehouse has now been sold for a profit, highlighting the success of this redevelopment strategy that emerged during the public health crisis. According to Illinois property records, New York-based Nuveen Real Estate recently acquired the 100,400 square foot warehouse located at 350 North Wolf Road for approximately $20.6 million. The property was previously owned by a joint venture between Chicago-based developer Stotan Industrial and Los Angeles-based PCCP. This venture completed the construction of the warehouse in 2024 and leased it to last-mile e-commerce delivery provider OnTrack. The sale marks the culmination of a redevelopment plan that began in October 2022 when Stotan and PCCP purchased the site for $4.4 million. They secured a $13.1 million construction loan from Rosemont-based Signature Bank Chicago to finance the project. Despite the challenges posed by rising federal interest rates, the developers managed to complete the project successfully. While the exact amount spent on the warehouse beyond the land acquisition and loan is unclear, it's likely that Stotan and PCCP sold the property for more than their total investment. However, the potential profit might have been affected by the higher borrowing costs that have impacted the commercial property market. Nevertheless, the sale price exceeding the redevelopment cost validates the office-to-industrial conversion trend that gained traction during the pandemic. During the pandemic, warehouse developers actively searched the Chicago suburbs for sites to transform, driven by a surge in online shopping and the need for enhanced supply chains. The simultaneous rise in remote work made outdated office properties ideal candidates for redevelopment. High-profile projects like the transformation of Allstate's former corporate headquarters in Northbrook illustrate this trend. Collier's senior vice president Tyler Ziebel, who facilitated the sale to Nuveen, stated that the transaction clearly validated the developer's strategy. For Nuveen, the acquisition represents an opportunity to secure a highly desirable asset with potential for continued rent growth in a market with limited supply. In Canada, particularly in regions like Kitchener-Waterloo, London, and Cambridge, Ontario, there has been a similar shift in focus from traditional office spaces to industrial and warehouse developments. This trend aligns with the growing demand for logistics and distribution centers due to the increase in e-commerce activities. The adaptability of these regions to such changes mirrors the strategic moves seen in the United States, showcasing the cross-border relevance of this development approach. In a significant development in the commercial real estate sector, Starwood Property Trust has announced its intention to acquire Fundamental Income Properties, a Phoenix-based real estate firm, for an impressive $2.2 billion. This deal encompasses Fundamental Income Properties' extensive portfolio, which includes 12 million square feet of commercial space. The acquisition is poised to reshape the landscape for both companies, providing Starwood Property Trust with a substantial foothold in the Phoenix market. The acquisition of Fundamental Income Properties by Starwood Property Trust highlights a strategic move within the commercial real estate industry. With such a vast portfolio under its belt, Fundamental Income Properties has been a significant player in the market, making this transaction noteworthy for stakeholders and observers alike. The move aligns with Starwood's broader strategy of expanding its assets and influence within the industry, particularly in high-growth areas like Phoenix. The commercial real estate landscape in Phoenix has been evolving, with firms like Fundamental Income Properties capitalizing on the area's growth potential. This acquisition not only underscores the value of the region's market, but also reflects a broader trend of consolidation within the industry. As companies strive to enhance their portfolios and market positions, such acquisitions become vital strategies for growth and competitiveness. While the acquisition is focused on the Phoenix market, it provides a lens into the broader dynamics of the commercial real estate sector. Similar trends can be observed in other regions, such as Kitchener-Waterloo, London, and Cambridge, Ontario, where strategic acquisitions and mergers are helping firms strengthen their market presence. The cross-border relevance of such developments highlights the universal strategies employed by real estate firms to remain competitive in a rapidly evolving market. Matt Brown, COO of NAI Merin Hunter Codman, provides insights into South Florida's office investment market, highlighting opportunities in smaller, move-in-ready spaces. Brown emphasizes that small businesses are the largest segment of private sector employers in the United States, making these spaces crucial to meet current market demands. He points out that while attention often focuses on premium downtown office buildings, there's a significant shift towards suburban assets that offer modern, flexible environments. According to Miami Realtors, as of mid-2025, commercial real estate sales in the Tri-County region surpassed $5.6 billion, with office transactions alone exceeding $1.4 billion. This marks more than double the year-over-year increase, showcasing the strong demand in this sector. Broward County in particular led the way with major office deals in Fort Lauderdale, outpacing neighboring counties in both volume and transaction velocity. Brown notes the importance of operational discipline, tenant engagement, and strategic repositioning in differentiating successful office investments. He mentions that NAI Merin Hunter Codman's approach involves focusing on smaller, amenitized office spaces and migration towards lower-cost suburban markets. These areas offer convenience of commute and proximity to lifestyle amenities, which are increasingly prioritized by tenants. South Florida, particularly Palm Beach and Broward counties, remains a cornerstone of office investment due to its population and job growth, tax advantages, and quality of life factors. Investors are attracted to the region's strong rent growth and low vacancy rates in Class A assets. The migration of businesses from higher tax states during the pandemic has further bolstered the local business ecosystem. In the first 90 days of ownership, NAI Merin Hunter Codman focuses on effective implementation, including lease reviews, tenant engagement, and property enhancements. This strategy ensures a smooth transition and maximizes value for their investments. Brown emphasizes the role of proactive leasing strategies, including phase-in deals for larger spaces and pre-marketing spec suites, to accelerate lease-up and drive value. The firm targets light value-add, financeable office assets across the Southeast United States with a strong focus on Florida. Brown highlights recent acquisitions like Bridgeport Center in Tampa and Ecoplex in West Palm Beach as examples of properties with untapped potential. These assets are upgraded with amenities to attract tenants and boost occupancy, demonstrating the effectiveness of their investment approach. Brown identifies the continued demand for Class A and trophy buildings with prime locations and contemporary amenities. However, he also notes that many Class B+ properties remain appealing, especially those in suburban centers with convenient access to residential and retail offerings. These properties cater to value-oriented organizations and small businesses, which are pivotal in the office market. The firm's in-house property management arm enhances investment performance by staying connected to tenants and addressing issues promptly. This approach leads to higher tenant retention, smoother operations, and stronger investment outcomes. Brown's insights reflect the broader trends in the office market, emphasizing the importance of strategic asset management and tenant-focused strategies. In an impressive transaction, Jordan Beck, Senior Vice President of Berger Commercial Realty, has successfully brokered the sale of a $47,250,000 industrial portfolio in West Park, Florida. This deal, which closed on July 14, 2025, marks a strategic acquisition for Hirsch Equity Group, a private real estate investment firm, as they aim to stabilize rents and enhance operational performance within the South Florida market. The industrial portfolio spans 9 acres across 3 tax parcels and includes 6 buildings strategically located in West Park. The properties are situated at 5901 to 5981 Southwest 21st Street, encompassing 56,200 square feet, 5801 to 5897 Southwest 21st Street, with 70,815 square feet, and 2100 to 2251 Southwest 59th Avenue, covering 101,493 square feet. The seller, Interstate Development Limited Partnership, has privately held the property since the 1970s. Over nearly 5 decades, they acquired the land, developed the property, and consistently leased and managed it, showcasing a rare level of long-term vision and stewardship in South Florida's industrial market. Jordan Beck represented the seller in this off-market transaction, which came to fruition after 3 years of consistent follow-up and relationship building. Beck's persistence and in-depth market knowledge were crucial in aligning the right buyer and seller for a smooth and successful closing. "This was a significant transaction," said Beck. "Representing a long-term owner and delivering the right buyer in a complex off-market deal reflects the value of experience and persistence." The acquisition highlights the strong investor interest in South Florida's industrial sector, where strategic assets continue to attract targeted capital. The transaction underscores the ongoing demand for industrial properties in key markets, and it reflects broader trends within the commercial real estate industry. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.